Okay, there we go. Good evening, guys. So tonight is the second part of our session where we are going to be focusing on the candlesticks. Now, tonight is going to be a pretty interesting one, and I think it's going to hold a lot more, understanding for you guys on things like why, there's why candlesticks matter. And what we're going to do as we are progressing through the course, you guys are going to see that we are going to be teaching on specific things. So we're not specifically going to be teaching only strategies right at the end. We're going to show you, when you master candlesticks, what is the potential for you to learn there. And we're going to be putting together, some really, really nice stuff for you guys to help you guys make overall, decisions to what your style of trading is and what you can potentially, use in your arsenal of tools and tricks for you to actually build good quality strategies. So tonight we are carrying on with the anatomy of a candlestick. Okay, so it is to learn to read what price is telling you. So guys, we're going to quickly do a recap of what we learned last week. We're going to go through some of the stuff we did last week, and then we are going to look at some new information this week. So a candlestick is pretty much a visual representation of the price movement over a specific period. Remember last week we spoke about it. You've got the 1 minute, the 5 minute, the 15 minute. Obviously you start with a daily candle, and then in the daily candle there's a certain amount of 4-hour candles. In the 4-hour candle, there's 4 1-hour candles, and then it goes down. So you keep breaking down price as you go down, guys. All right, so this is very important to remember, that candlesticks are giving you a snapshot of what is happening. The higher the time frame, the more accurate, the more better your positions are. Where on the lower time frame there's a lot more noise, there's a lot more things happening, so you can look towards the candlesticks telling you a story. So let's remind ourselves, one candlestick. So how does candlesticks form? There are 4 key prices on a candlestick. We have the open, we have the high, we have the low, and we have the close. Okay, so these are, you can see how we have the open, the close, the high, the low, the upper wick, the lower wick, and the body. Okay, now tonight we're going to be speaking a lot more about the body and the wicks. Okay, so so remember your body, going back here, let me just have a look here. So having a look here, you can see this is the body and those are the wicks. So we're going to be speaking about that a lot more. And if you want, you can go to the book reference and go and have a read up on that, guys. So what is a bullish candle? A bullish candle is pretty much a candle that opens at the bottom and it closes at the top. Okay, I will be giving you guys some examples of that. So I'm not going to show it now, but I am going to show you examples on the chart shortly. Okay, and then we have our bearish candle, which obviously opens at the top and closes at the bottom. Now, tonight we're going to be spending a lot more time on the wicks and the body because we want to understand more what is happening there. So obviously you have your upper wick, you have your body, and your lower wick. So we're going to dive into this a lot more, but that is pretty much how a candle is set up. Now, what is the high of the candle? The high is the highest the price reached during the candle. Okay, so the high is all the way to the top of the upper wick. Okay, what is the low? The low is the lowest point, okay, and the bottom of the lower wick. Now I know you guys, there's no diagrams here. We're going to go into a lot of diagrams now. I just want to do a little bit of a recap. So what does it mean if you have what is the difference between a large body versus a small body? Okay, large bodies in candle means that there's a strong movement between the open and the closing price. Okay, so the larger the body, the more momentum there was in that specific candle. Small bodies means limited movement between the open and the close. Okay, so what does the size of the body tell you about the movement during that period? It pretty much covers, how strong the momentum within that candle is. So it's also showing you some volume that is lying within that candle. Now, what is the difference between a long wick versus a short wick? Well, a long wick tells us that price traveled further from the body before closing back down. So that means if you have long wicks, it means that there was a lot of volatility and a huge amount of rejection. Okay, what is a short week? It means price remained closer to the opening and the opening and closing area. Now, how do you actually read a candle? So instead of saying it's a green candle or a red candle or a bullish candle or a bearish candle, what you want to rather focus on is you rather want to focus on saying things like, let me just, price opened here, moved down, then pushed higher, reached this high, and eventually closed here, because you are reading the story of price. So it's not just about looking at the high and the low or what the color of the candle is or what the push is. It's more about understanding how did the candle form. And remember, the higher the time frame of the candle, the more powerful the move is, and the more the stronger the story becomes. The smaller the lower the time frame, the less the story becomes. There's a lot more noise within your story during that period. Okay, guys, so remember that. That's why we always look towards the higher time frame to determine the trend, to look towards which way to trade. So what I want you guys to do is we're going to open TradingView now, and then we're going to find 5 bullish candle, 5 bearish candle, and then we're going to look at 5 candles with long wicks, small wicks, and we're going to look towards price telling us a story. Now, we're going to be opening up the 4-hour chart tonight because I think it's important for us to understand the story, okay, to understand what we are looking at and why there are specific things in the market. Okay, let me just quickly just open up my chart, and then I can show you guys this. Okay. Let me just quickly do that. Okay, I'm going to open up for you guys now. Okay, oh, what the heck? Why is this thing opening up like this now, you silly thing? So let me quickly just do that. Okay, there we go. All right, so let me quickly open up the chart. Okay, there, I've got it. Okay, cool, got it. Okay. Right, so let's quickly open up the chart, and then we're going to look towards what the chart is telling us. So this is the 4-hour chart. Now, looking at the 4-hour chart, we can see that there are lots of different candles that are forming here. So what are we looking at? We want to look tonight towards what is strong momentum, what is weak momentum. Now, let's have a look at this specific candle here. Or this bearish one here, right? So most people will look at this candle and will say, yeah, but this is just a bearish candle. Well, it's not just a bearish candle. It actually has an important story that it would like to tell us. Okay, now what is that story? The story is simple, guys. You can see that the candle opened here. So all bearish candles open at the top and close at the bottom. Green candles open at the bottom and close at the top. But now let's have a look at this specific candle. Now, this candle tells us that this is what we call a momentum candle because the price opened here, right? Then let's see if I can get this thing even bigger here. Yes. So we can have a look here. Price opened here, slightly pushed up to there, then pushed all the way down. And do you see that there is no wick at the bottom? Now, that a candle with no wick at the bottom tells us that there is a lot of momentum in the... No, we can't have now, wait. So you can see that there was a lot of bearish momentum. We didn't even have a wick at the bottom. You can see that price just kept pushing down, kept pushing down. So that is telling us that there is a lot of momentum in the market, bearish momentum, and that the candle had a lot of volume behind it. Now, when we look at a candle like this, we can see that the wicks are fairly long on both sides. So we can see the candle opened here, pushed up to there. Price then got pushed all the way down to here, and eventually the price closed here with a small body. That tells us that the momentum has slowed down and that there's not really a decision maker in the market at the moment. Okay, and you can see how price reacted at specific points, especially on the higher time frame. you can see that when you are looking at price, you can see that, like for instance, here you can see that there was a lot of momentum behind this candle, a small wick at the bottom, a small wick at the top with a lot of body. So the more body the candle has, the stronger the move. Okay. Now you can have a look here again. You can see that we've got this body here. We can see this entire wick all the way up to here. It got pushed all the way back down, but they were unable to overturn the price and it closed. Then you can see the next candle was green, but look at this rejection candle that came, this bearish rejection candle right after the sweep that they did here. They tried to push the price down, failed, and then it moved in the opposite direction. So I always say the body tells us the direction, the wicks tells us the damage. Okay, so the more wicks you have in a direction, the more it is showing you that market is trying to go further down, but it is failing. For example, here you can see, look how many times the wicks has tried to go further down, it failed, and the price is pushing up. Okay, and now you guys can see that our 30 trade challenge trade has just gone for TP. Absolutely stunning. All right, so you can see here, look at this candle. You have all of this bullish pressure here. Look at that wick of rejection that happened here, right? Look at that wick of rejection, and you can see the next candle also pushed up aggressively, retested it again, pushed further down to here and closed it. So this is showing us a reversal scenario because the bulls with so much momentum, they failed to break higher. And with that next bearish candle, it's telling us that they are failing to break down. And then you look towards some more downside. Okay, guys, so that is what, so the bigger the candle, the bigger the momentum. The longer the wick, the bigger the damage. Can show you, like here, for example, look at this candle. Look how far it wicked down and it got pushed all the way back there. So that shows us, Daniel, there's some chicken in the microwave, my boy. Okay, so you can see how this candle got pushed back. Look how the wicks are pushing the price towards the upside. Look at this battle. Look at the wicks at the top and look at the wicks at the bottom, how they were fighting to get the price up here. Okay, so on the higher time frame, this is really great to practice because then you can see how the momentum, how the market is being pushed in a specific direction. Okay, so that's important to understand for the next section, which we're about to jump into. Right. So now let's jump into our next section. So this is a fun section. I think you guys are going to enjoy it. And I think it's also going to give you guys understanding of why it's so important to understand the story. You can have all the chicken that's in there. So now we're going to look at what's happening. Why is it important for us to learn about candles and why is it important to understand candles? So before you learn patterns, so before we jump into patterns, what can candles actually offer us? What can we potentially trade with only using candles? Okay, so important to you need to learn to read the candle. You don't need to memorize 50 patterns if you don't understand the basic information contained inside every candle. So the next chapter we're going to be looking at bullish and bearish candlesticks. But before we jump into that, we are going to cover something which we call candle range theory. So if you are someone that enjoys looking at the candle, you like a naked chart, then you are going to enjoy a strategy which we call candle range theory. Right, so candle range theory deals with only the candlestick. So you need to have a deep dive and understanding of how candlesticks work in order for you to be able to trade this specific strategy. So if you prefer to just have a naked chart, look at candlesticks in different time frames and make your own analysis on that, then this is going to be something you're going to enjoy. So what we've learned the open, the high, the low, the close, the body, the wicks. Now, how can we use this information? Now we're going to introduce you to what we call candle range theory. So what is candle range theory? A candle creates a range between the high. So we have a high, we have a low, and then we have the candle range. Okay, now the high and the low becomes the boundaries of the candle's range. Okay, so the candle is no longer just a candle. It becomes a reference point for analyzing what price does next. Okay, so you're going to use specific higher time frame candles to determine what your next move is and how you can trade it within it. Okay. So let's look at the parent candle. Now, The parent candle is what we call the reference candle. This is the candle where we mark out the high and the low, and then we are going to look towards what happens on a lower time frame within that candle's range. Okay, so there's no predetermined candlestick that you have to use. It's important for you to find some sort of strategy. We are going to be showing you a specific strategy that comes with candle range theory that has a lot of credibility behind it. It is an ICT concept. It's used by millions of traders around the world. So it is a pretty good candle range theory strategy that you can follow. So the parent candle or the reference candle is the candle we use to define the range. So this is so you're going to look for the candle number one, which is the parent or reference candle. Then you are going to look towards the high and the low, and that includes the wicks as well. Then you have your key levels, which you will be marking out, which we call the candle range high and the candle range low. The high and the low. Why does this matter? Because these two levels become our reference point. We observe how price reacts when it interacts with them. Okay, so now watch what price does. So now you have candle one, which is the parent candle. So it creates the range. This candle establishes our reference range, the high and the low. Okay, so this is our reference candle. Now we look at candle number two. This moves outside of the range. Price sweeps on one side of the range. So it takes out range either towards the up or the lower side. It sweeps the high or sweeps the low and closes back into that range. What happens after the sweep is what we call the rejection, and then price returns inside the range. So price is back inside of the range, and then you have a valid CRT setup. So you need to ask yourself, did price genuinely break the range, or did it take the range and return? This is where CRT becomes a framework for reading price behavior. A common CRT formula looks for the price to sweep on one side. Same thing we're watching. This is exactly the way the silver bullet works. We're looking for a sweep on the one side of the reference range and then a close back inside of it. Okay, so what does the basic CRT sequence look like? Okay, there's 4 steps. You mark the high and the low. Then you look for a sweep of either the high or the low. Then you look for a return back into that range. And then you are going to look at which way is price potentially going to move. Are you going to trade it back to the high or to the low? Sounds very complicated now, but we're going to have a look at it now and it's going to break it down easy for you. So the key idea is that the market often seeks liquidity beyond obvious levels, then return inside before continuing in the opposite direction. So I'm going to show you guys what you can look for a CRT candle. What do you want to see on the parent candle that makes it a better parent candle than all the other candles? So price sweeps the high. So what does a bearish CRT look like? Price sweeps the high, closes back into the range, inside the range, and then you want to look to trade it from there to the low of the other side. The interpretation is simple, guys. Price took the upper side of the range, returned back inside, and then the working hypothesis is that the price may rotate towards the opposite extreme of the parent low. So it swept the high, and then you target the low. Important, guys, this is not a guaranteed reversal. The setup still requires risk management and validation. Right. What does a bullish CRT look like? Same thing, parent high and low. It sweeps the low, comes back into the area, and then you want to target it towards the opposite side. Okay, so that's what a bullish CRT looks like. Now, I know this is very, very small. Why candle anatomy matters, I'll just make this, wait, let me make this a little bit bigger here, guys, because I can't even freaking read it. I don't know why I left it so small. Let's make it a little bit bigger. Oh, I don't even think it's going to make. Okay, well, I'll redo this one. Okay, so this is the big connection, guys. CRT depends on understanding where's the high, where did price reach, where was the low, where did price reach, and then looking to include the wicks. Okay, did the price reject at an extreme? Okay, so this is the important part about trading CRTs. You want to look for candles with massive wicks. Those are the candles that is the best opportunity to trade. I will show you guys now. Did price remain outside or return inside? Okay, and then you can look towards the candles story. So don't trade the wick alone. Okay, because a lot of people will look toward price wicking and then they'll come in, and when the wick comes back inside, they just take the trade. No, you want to see a nice sweep outside of the area, price returning back into that area. Okay, so wick outside the range is not automatically a CRT setup. Okay, so ask yourself the following 6 questions. Did price take the reference high or low? Did price return inside the range? Where did the candle close? What is the broader market context? And what is your invalidation? What are the things that invalidates the chart? And does the setup meet your trading plan? So with that, you can look towards the sweep, the return, the close, and then the confirmation. Okay, so wick plus context plus confirmation equals high probability. Don't guess, observe, interpret, confirm, and then execute, guys. Okay, so what is the difference between a beginner and what you want to do to? So I want to just give you guys an idea when you're a beginner, what you need to look out for. Remember, as a beginner, you're going to look at price. The price broke the high, so what do? They just buy. Oh, well, we had a breakout. Doesn't necessarily mean that it is a valid CRT setup. You need to make sure that there's certain that the candle closes back into the price. So here are the questions. Price took the high. Did it hold above it? Where did it close? What does the candle tell me? And what does my setup, or does the setup meet my rules? And then think before acting. Logic over emotion. Okay, so the professional thinking is with CRTs, you must observe, interpret, confirm, and then execute. Okay, so what is the CRT candlestick? What's the understanding? So now I've included for you guys the candle anatomy. So we're looking for momentum, rejection, indecision, expansion, contraction. Now that sounds very complicated, but I'm going to show it to you guys on the chart now and you can understand it. Okay, so first of all, we want to see that candle range, right? Then we want to see a sweep, a return, and then a potential rotation, reversal. Okay, so here's just another one for you guys to break down. So these are 2 of them you can take out of the PDF, and you guys can keep them to remind yourself of what you are looking for. Okay, so it's very important to look towards the candle's anatomy. The candle that you choose for your CRT is extremely important. Okay, there's specific things that you want to see. Don't just take any candle that you see, guys. I don't know why these things are so small. Okay, so this is the example. So I can just as well go to the example now. I don't know why my writing went so small. Okay, so let's quickly have a look. So what does CRT actually look like? Okay, now when you are looking at the chart and you want to trade CRT, now the first step I would advise you to do is to look towards some sort of indicator to help you to identify this in the beginning. In the future, you can mark it out for yourself and it's easy. But in the beginning, you need a pretty good indicator, something that's going to help you to make a decision. Okay, so what are you looking for when it comes to the CRT model? Okay, you want to be looking at a much higher time frame. 4 hours, 1 hour. Normally, they use the 1 hour time frame for that, especially for intraday trading. So let's jump to the 4 hour and the 1 hour, and then I'm going to show you guys a beginner-friendly indicator. So the first one that you can look towards is what, I don't know if you guys have ever heard of the ICT called the CRT turtle soup. Okay, turtle soup is a famous ICT concept that has been used for very well. Lots of people, I know lots of traders on TikTok everywhere that is trading the turtle soup. Okay, so let me switch that on. So what does the turtle soup do? Okay, the turtle soup is pretty much just an indicator. It's a CRT concept, but what it does for you is you're going to see here, it's going to, okay, on the 1 hour time frame, it's not going to mark it out. But now when you go to the 15 minutes, it is going to mark out the 1 hour candle for you. Okay, so you don't have to jump between different time frames. You can stick to your specific decision or the time frame that you prefer to trade at, and then it will give you your your CRT concept. Hello, why are you not loading? What's your problem? Okay, I don't know why it's not. Okay, maybe it's only giving us a specific time frame. Let's see. Or is my chart not loading properly? Okay. Okay, so maybe it's only on the 5 minutes. Okay, so I think normally the turtle soup, it will only I think it's just like the silver bullet. It will only appear at a certain time frame. I just want to quickly check what was the time frames that it gives us. Yeah. Normally okay, let's quickly see here. No, it doesn't have a specific time frame to it, but this is normally the most used turtle soup one. But this one, I will just give you guys some more information about the turtle soup and break that down. But now let's look towards just a standard CRT. Okay, so what you're going to do is you're going to go onto your 1 hour chart. Now, as I said to you guys before, read the story. Okay, it's very, very important for you to read the story. So what is important within our story, guys, is what's important is to understand who is in control of the market and when. Okay, so when does CRT work really well? It works during ranging markets. Like moving averages likes momentum. They want a bit of CRT loves ranging markets. Okay, so when you have that bounce like we had today, yeah, this is when CRT works the best because it is looking towards those reversals. So what are you looking for on a CRT? Now, as you've just seen, not every candle is the same. So what are you looking for when it comes to CRT? You want to look towards specific areas of supply and demand, specific areas of resistance. Okay, so that's why we taught you guys the story last week of specific areas that you want to trade towards. So let's do our zoom back here. Okay, so we're going to do our zoom back and we're going to go through that exercise again. Okay, so based upon what we are seeing here, we can see, so let's have a look at this story from here, right? So we can see here, right here, is a strong area of, well, it's now support, but it used to be resistance, right? So here you can see that there is a strong area of resistance, now support. Okay, so it's now turned support. So you can see it was red, now it is green. So in the future, we will be looking towards this as being an area of support until it proves otherwise. Okay. So the important part is to understand, change the colors so that you remember who is in charge in which area. Okay. Now, what is the next area that we can look towards? We can see down here that there is another area down here where price kept rejecting off over and over and over. And we can see that it is technically a green area, not a red area, because that is where the bulls successfully defended their territory here. We can clearly see that. And now we can see that on this chart here, so let's just get some more confirmation from the past, because we want to see a little bit more of price movement before we make a judgment call here. Okay, so we can see right here that right here is an area it's now turned support, but it used to be an area of resistance right here. Okay, so let's bring this one slightly up. We can see before it was an area of, it used to be an area of support here. Now it has turned to an area of resistance. Okay, oh, no, that is wrong color. This one should have been red. Wrong color, Marnie. Okay, so there we go. So there it used to be an area of resistance. Now it's turned an area of support. And now we can see that price keeps bouncing off this exact area now here. So now we can see that this is forming to be an area of resistance. Okay. Does it correlate with the previous market structure? Yeah, I think it pretty much correlates very well with it. So it doesn't have to be an exact science, guys. For CRT, you just want to see where are those major areas where price keeps bouncing off over and over and over again. We can see right here. Okay, so that would be our area of resistance at the moment. So why are we looking for these areas, guys? The reason why we are looking towards them, we can also see here, this is now an area of support, but right here, we have a very nice little area of support here. So why are we looking for these areas, guys? The reason why we're looking for them is because when you are trading CRT, these are going to be the areas that you are going to get the highest probability setup. So now let's go down to the one. Let's zoom in and have a look at what's happening. Now, as you guys can see here today, we bounced off this area very nicely. So this would have been a great CRT here, okay, at 2 o'clock. Okay, so today, Friday the 7th, you can see it was a great CRT. Why? Because, and this is where most people trade when they like to trade news, some people like to trade the reversals because they like the CRT model. Okay, so you have NFP candle, which pushes up, and then you know that it's bouncing off a strong area of resistance on the higher time frame. So you know that you are looking for a great CRT model. So now let's have a look when we drop down to the 5-minute chart. Okay, so let's go and have a look at what happens now. So what we're going to do now is we're going to look at price coming in here. This was the NFP candle, right? So this was the NFP candle. So what do we do? On the 1 hour, what we want to do with this candle, this 1 hour candle that placed here. So what we want to do, let's zoom in so I can show you guys here, is you want to now go, like we said, you want to go and mark out the high and the low of the candle. Now, I said before, not all candles are created equally. So you want to look for a high volume, high momentum candle with massive wicks. Okay, so guys, make a note of this. When it comes to CRT, you want to look for a candle that has a massive wick at the top and at the bottom, which is telling you that there was a lot of damage that was done there. Okay, so what are you going to then do? You're going to take your line and you're going to mark out the high of that area of that candle, right? And you want to mark out the low of that candle here. Okay, so now what do we want to look for? We want to look for a sweep. Now we can clearly see that the next red candle never swept above this area. So this one is now discontinued. Okay, so what do we then look for? The next thing that we look for is we are looking at this specific area. So now, yeah, look at this candle here. You can see we had a massive rejection candle here. Then we had another red candle. So what are we looking for? Now we will look towards, we're on an area. So our first confirmation is we are on an area of support. Okay, so we are automatically going to assume that price will reject. Okay, so we are now going to automatically, but that doesn't mean just because we see it doing that, doesn't mean that we jump in on the trade. We're still going to mark out our CRT ranges. Okay, so now let's say you did mark out this candle, and I want to mark out this candle so I can show you guys what invalidation looks like. Okay, so what is the rule with CRTs? We want to see the candle coming and sweeping outside of this area. Did this red candle sweep outside of the previous candle? Yes or no? No, yes. Okay, so that's step number one. So step number one is, okay, so step number one is we are close to an area of support and resistance. So the first thing you want to look for is, are we at an area of interest, guys? Are we at an area of interest? This is how you're going to turn your CRT model into a powerful tool, because you now understand I'm looking for areas of interest. I'm not just blindly looking for any candle. Okay, I'm looking for an area of interest. Now I'm looking towards price breaking here. It fails to break there. As you guys can see, we've just created another candle. Okay, we've created. So what do? Doesn't mean that our CRT model's off the table. It just means that we're going to have to maybe zoom in on this candle, put our level there, right? put our level there, and put our level right here. Okay, so now what are we going to do? Now we can see, whoa, this candle, when we're observing this candle on the low time frame. So now let's have a look. Monday, the 10th of August at 4 p.m. Now, Monday the 10th. Monday the 10th at 4, is it 4 a.m. or I think it was 4? Did I say 4 or 4 p.m.? Oh, here it is. Okay, so what do we see here now? Okay, here is the close of this candle. The candle, I think it was the 4 p.m. candle. So now we're here at 4 o'clock, right? Where's 4? Yes, 4 o'clock. That's where the candle closes. Okay, so what happens? Now we're observing price. Price comes up to this area, doesn't break above it. Price then comes back down to this area here. Did price close outside of the area? Yes or no, guys? Did price close below the previous week of the other one? Yes, it did. Okay, so now what do? We see, okay, cool. We've just closed below that area, right? We're in that area. What do we see happens next? A massive green candle that eats up the previous candle. Okay, so that is an extra confirmation for a position. Then we take a long position on the close of that candle, put our stop loss below this area, and target the opposing side. Okay. So that is what we are looking for when it comes to the CRT. And then obviously, if you you're looking towards market structure, you can see, okay, if you don't want to specifically target that, you can even target the opposing liquidity. Okay, so once you understand, you can see, and this is my favorite model that I like to use when it comes to trading in specific ranges, is using the CRT model. Now, I know some of you guys have bought Etienne's. I think Etienne, does Etienne not have a CRT thing, guys? Huh? I think Etienne has a candle range theory indicator that he made, if I'm not mistaken. So you can use that one as well. Okay, but this is the model that you want to look towards, guys. Now look at the size of this trade. Okay. Now, is each one of them going to be this easy? Hell no. I wish candle range theory was always that easy. It's not always that easy, guys. Now, what do? Now we go to the next. Oh, okay, guys. Let's have a look. Oh, I see. Use the, okay. So, guys, I will just look for, here's one from Flux. I'll just go and check which one is there. But, guys, it's actually quite simple to trade CRT in itself. So, what are you going to look for now? Now, after we've done our assessment, now let's have a look at this one here. Okay, so now what do we see? Guys, it's very important for you to draw your areas. Learn this story. Okay, so now look at this. Now we get here. So what do? So I want to make sure that candle was 4 to 5. Yes. This candle opened at 5 o'clock. I just want to quickly make sure, was that trade entered before 5 o'clock? Otherwise, that is an invalid trade. Yes, it did. You guys see that? This is a perfect CRT. I was just like, I wasn't sure. I didn't check the candle. So you can see that the 505 candle went outside of the range. Okay, so that is a valid candle. I was like, did I now see it wrong? Okay, just wanted to make sure so I've got it right. So now let's have a look at this candle for today, guys. Okay, so let's have a look at this candle. Do you guys see this? Look at this candle right now. Are we having a CRT right now? We are. Let's go to the 15 minutes. So let's mark out this previous 1 hour candle. You can see here. There is our range, right? There is our bottom. Yes, guys. But the important part with CRT is you've got to know the story, guys. You've got to know the story. When price is close to an area of support and resistance, that's where you want to trade CRT. Now look at this. Price went outside the range. Here's the candle. There. That's where you would have entered your trade on the open of that candle. I would have put my stop loss above this area. This will be target number 1. Okay. So you guys can see it. That's how candle range theory. But the important part with candle range theory, guys, is you have to trade it with areas of support and resistance. Okay? And I don't like to use areas of support and resistance for the exact time frame that I'm trading on. I want to go and look at least at the 4 hour or something, zoom my chart back and look, what are the most important areas? So you don't want to mark out all the areas, guys. You just want to go and mark out the most important areas that you can see. Okay, so now you guys can see here is an exact, and in this trade, you can potentially do the exact same thing that I said to you guys before. Just take out half the position. Once you get to 1-to-1, take it off and then set your TP to the bottom here. Then you're done. Leave it and see what happens. See what happens with your trade. If it kicks back, it's going to take you, it's going to cost you nothing. If it goes all the way to the bottom here, you can get an easy 4-2-2-3 there. Now let's quickly have a look at the other trade that happened here. Let's look at this one. Now this one would be an invalid CRT. Not because it was not a, it was because this very next candle here, this one here at 4 o'clock, okay, you can see that the candle closed so high at the top there, okay, but let's see if we got an entry here. So this is the candle at 4 o'clock. Let's see. Okay, so let's see. Here is 3. You can see here right at 4 o'clock. This candle closed. Now, do you guys see that this candle here, do you see that there's a very next candle pushed? So this candle went out. That's what created that little bit of a wick there on that candle. And you can see this very next candle pushed right back in. So I can take my long position here. Stop loss goes below that area there, and I can target the opposing liquidity, which is there. Okay, do you guys see why candle range theory is very important to trade off specific areas? Now let's quickly go back and look at some historical data. Now let's have a look here. So what happens? Not every CRT is going to work out the exact same, guys. Let me show you. Because at some point we used to have this, right? We had this. It was a resistance area. Now let's have a look at this one. Friday the 7th at 8 o'clock. Okay. So sometimes CRT is going to show you flames, guys. That's why we're learning to take stop losses. Okay, so what happens? Okay, now we're seeing this candle forms here, right? So we mark out the high and the low. And now we go to the what candle? We're going to look at the 9 p.m. candle. 9 p.m. candle. Let's quickly have a look. Where are you? Where are you? Where are you? Okay, so here we go. 9 o'clock. So here it is. So there you can see there's the candle. Do you see this candle never wicked outside of this area here, right? But now let's say you say, okay, cool. You know, we're at this. We start creating some structure away from this. So, okay, I'm going to take my opportunity. I'm going to take the short here. Okay, going to put my stop loss above here because I'm expecting it to bounce here. And you can see we never got to the opposing liquidity. And then what happened? Price took us out at stop loss there. Okay. Right, so you can see it, and then you see, okay, now price is coming back in, and then price is staying in this range, and then eventually. So my advice is never, ever trade CRT on the breakout of a candle. Always trade it when it's coming to a dynamic area of support and resistance. Okay. But now let's have a look at this CRT here. Okay, so you can see here we have this massive wick here. You can see the price never went outside of this area here. So you can see if you have this CRT candle here, if I mark out this one here and that one there, very, very important. You want to see that candle. You want to see that candle sweep. You can see this candle never ever swept inside that range and came out. It's very, very important, guys, that whenever you are trading CRT, you want to see that other candle sweep the high that this candle make, because you are looking for a short. Okay, so you already set it up and said, listen, I'm looking for a short. So it's not just you waiting to see which way does it break. You are already intentional about what you are looking for. You are looking for a sweep. Right? So you are looking for a bearish structure because you've looked at the higher time frame and you've realized, listen, I want to look for a short position. Okay. Now, Wednesday, the 22nd of July. Let's quickly see. Wednesday, 22nd of July. That cannot be because that is a freaking Sunday. Let's have a look here. No, why are you going all the way to June? I don't want to go to June. I want to go to July. Oh, because I'm at February. Oh my gosh. I was about to say this looked really weird. Okay, let's have a look here. Okay, so let's quickly have a look. Where's that area? Okay, here you can see. So that was the high. That was the low, right? Look at that. We never swept that. Look here. Here's 5 o'clock, right? 5. What I think that candle was from, it opened at 6. Look where we are at 6. Do you see? We never pushed back into that area. We want to see that clean sweep. We never saw that, guys. And that's why that is an invalid CRT model. Okay. Yes, this candle opened at 6. Yes. So that will show you, no. Don't trade that one. Okay. Don't trade it. Stay away. Now you might say, yeah, but can I trade the next candle? Guys, look for the first bounce off the area. If the bounce is not clean and you can't see it, then move away from it. Okay. Don't try and let the market match. Look for that first bounce. Like here. Look for this. Look here. Price came to this area right here. Okay. So look what happened. This candle we can see never wicked outside of it. Then we had this candle, then we had this candle, then yes, and I know the candle eventually picked up here. Okay, but we can all see that price never ever wicked. This one slightly wicked out of this candle, but you cannot use 3 or 4 historical candles for that. Okay, you want to look for the candle that comes in first. Okay, so the right candle would have been this one and this one. But now you can see that this candle closed a lot higher than this one. But now let's say for argument's sake, you got excited, because sometimes we get excited and we want to trade, right? And then we get ourselves into a trade. So what happens? Now you put up your level here, right? So you put up your level here, and then you see, okay, this candle never went outside of it. Now you look towards the next candle, and you're like, okay, no, this candle never went outside this one. Then you looked at this candle, and you said, okay, this one never went outside. Now we put this one down. You can see none of these candles ever went on the opposite side. Now, what makes this strategy so good is we are not just using candle range theory by itself to say, okay, we are already predicting and analyzing in a specific direction. Now, how most people like to use CRTs, they just like to look towards the higher candle and say, yeah, well, this candle looks like a good candle, so let me take it. No. You want to have multiple confirmations. So the first thing that we do is we go to the 1 hour time frame and we look for areas where price heavily rejected off it. Okay. So we're looking for dynamic areas of support and resistance. Okay. That's the first thing we do. Why? Because it's going to increase your likelihood of getting good quality setups. Okay. Because sometimes things like this is going to happen. You can see here, you have this red candle coming in here. Now we have this red. The next candle here, you can see wicked outside of it. So now, why are we looking at this specific candle? Because we are now expecting price is going to reject here, because this is a strong area. Look at that wick there. You know, it had no wick at the top. So we are expecting price to reject off this area. Okay, so we're already setting ourselves up and saying we are looking for a long position. This is what makes this strategy so powerful. The way we've put it together is we already know what we are looking for. Where with most CRT models, they're just saying, well, let's see which way it sweeps. Does it sweep the bottom? Does it sweep the top? We are saying, no. We want to be more specific. We want to look for areas. We want to look at the story. And when price comes to this area, we want to see what does it do around this area. Now let's have a look. And it's very important, guys. So once price starts scraping around this area, step away. Okay, we want to see prices coming into this area. What is it going to do? Okay, so this is Tuesday, 28th of July. So you're not going to get CRTs every single day. You're going to get CRTs at specific areas. But if you combine it with strong areas, hard time frame areas of support and resistance, you're going to have really, really great results, guys. Let's have a look here. Where is that? Okay, here we go. So here is it. We said at what? 12 o'clock. Was it 12 o'clock? Yes. Okay, so let's have a look. 12. Yeah, you can see price is pushing. So what are you looking for in the 5 minutes? You're looking for price to go outside of this black line and for price to close back inside of this with a strong momentum candle, guys. Okay, so step number 1, mark out your story. Where's the bulls and where's the bears in control? Step number 2, look for price to come to that specific area. Okay, then mark out the candle that is the closest, that is touching that, or the closest to that area. Then look towards the next candle to see, does it sweep outside of that low and close back inside the range? But now, as I said before, not all candles are created equally, guys. So we are looking for a strong opposition candle, which we can see here. So right here, you can say, cool, I'm going to take the position there. We have a strong candle below these wicks here. And what am I doing? I'm trying to target the opposing liquidity for a start. Okay, what happens? Price starts pushing, 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 slightly pushing, pushing, pushing. And then eventually, if you didn't manage the trade and you just left it, you can see we did hit stop loss. Okay, so that's why I said to you guys, what you can do is you can decide where you want to place it. That's at 1 to 2, you know, but if you are going to place it on the opposing side, maybe look towards, the structure, or maybe, like I said, when you get to a 1 to 1, take off the table and see if it reaches your profit target. Okay, so here you can see trade didn't reach the target we were looking for, but the entry was pretty good because we looked for a specific set. And so what is the best correlation between 1 hour and the 5 minutes? Okay, now what do? We go back to the 1 hour time frame and we are looking towards area. So let's have a look. Let's look for a very weird area. Like here. Okay, so this one here, let's say you were looking at this one, right? Okay, I would not take it if it's this far from the area. To me, this would be like, no. I want to rather wait for it to get a lot closer to the area, but that's my personal preference. You might look at this and say, no, man, this is a perfect, look at this. We closed all the way back in the range. So maybe you can say, well, we touched here before. It looks like we're on that same area again. Let's see what happens. Okay, so that's entirely up to you. I prefer for a price to come to my areas, but you can look towards it here. So what are you looking for? You can see that you had a lot of momentum in this candle right here. So what is this? It's at 8 o'clock. We want to look at 21 hours, Wednesday at 21 hours. So what happened at, 5 minutes, 21 hour, 100 hours. Okay, so let's have a look at 2100 hours. So here we go. Here you can see price 2100 hours. So there the candle now closed. Oh, here we can see at 2100 hours. Okay, we can now see that the candle wicked outside there. Okay, came back inside of it. Is that a convincing bearish candle? Well, based upon the wick, it's a pretty strong, the rejection. It never really went outside of the range, right? But it did close. So yes, you could have taken it. It's not an A+ setup, but it's still, a valid setup. You could have just maybe looked towards saying, you know what, let me just manage the trade a little bit better. But you can see that price went all the way from there, all the way back down to the bottom of that area. For me, that wick is pretty good. If I look at the wick here, it's a pretty strong wick. So for me, yeah, this could have been a valid setup, not my type of setup, but it is a valid setup. Okay, so then you would have taken the short position here, stop loss just above that area. Now it's very important, guys, to keep looking towards structure. Okay, above that area, and then you can see you could have targeted this downside all the way down to here. Okay, so that's pretty much, you need to practice it. My advice to you is to follow these chronological steps. Okay, follow the chronological steps, because what you want to look towards is you want to look towards a strong structure. So same here, look here, structure is now turning. Does it mean that it's an invalid CRT? No, it doesn't, guys. Doesn't mean it's an invalid CRT. We are now going to observe, what does the price do? Does the price go further down? Maybe it's going to reject further off here and go further down. If you have a look on the 1 hour, you can see now that this candle is kind of like only finishing up now. So you did enter a little bit early into the trade. You know, you run the risk when you do enter the trade on this candle like this. You do run the risk of, you know, this candle potentially reversing on you, which has happened to me before. But it's entirely up to you how you want to trade it. I just think based upon what I'm observing here, you know, price going out of it with a strong bearish candle here, you can see that the price pushed down, and we've only got one more candle, one more 5-minute candle here, and then the price closes here. And then that candle would be a valid CRT candle. So yes, maybe sometimes early, you know, getting in too early might knock you. But I mean, in general, when you're looking at the size of the trades that you're going to take, they are pretty good, decent sized trades. So I think on average, you can have about, for every winner, you can cover about 3 losers in general, depending on how wide your stop loss is. All right, so as you guys can see, look, price is pushing back in here again. So what you can do is you can then wait, you know, for price to get to a specific area. But the CRT model in a nutshell pretty much works this way. So you can see here that candle is slightly pushing back, but it is still a valid CRT candle. So there the next candle opens. You can see it's now closed here. And now we're going to see, because we did sweep outside of it, is this going to be a valid candle? We don't know yet. You're going to have to be patient and see whether the setup plays out in your favor. Okay, guys. So that's pretty much, in a nutshell, how CRT works overall. All right. Okay, so I've given you guys a bit of examples. So what you can do this week is you can then go and practice it for yourself. But the reason why we combine CRT with anatomy of candlesticks is because it's a way for you to, the better you get. So if you're someone that enjoys candlesticks, you enjoy, you know, watching candlesticks, you don't want a very, you know, like full chart. You just want to look for, you just want to look for 1 or 2 trades. So the idea around the CRT model, guys, is you want to look for 1 good, maybe 3 good CRTs a week. Okay, so that's what you're looking for. You're looking for 2 to 3 trades a week, two or three good CRT trades. No, Colleen, swing trades are not CRT model, guys. So normally most people CRT on the 4-hour, the 1 hour. That will be the how would I put the main candle, you know, like the mother candle. That would be on the 4-hour and the 1 hour, and then they will drop down to the lower time frame to look for a potential entry there. Okay, so very important is to just be, you know, to be patient on it, to practice it. You know, if that's something that you enjoy, and you're like, yeah, I like CRT, is because what you are doing is you're ideally looking at the market and saying, listen, when we get to this area, I am most probably thinking that we are going to automatically reject off this area. So you wait for price to get into that area, show you a level of rejection, and then you jump in on it. Doesn't mean you're always going to get the trade right, but there's a lot more confluences and more things in your direction. The reason why you can't use smart money concepts or fair value gaps in this strategy, well, you can technically use it if you want, but just remember you are looking towards the higher time frame for the candles. You can potentially drop down like the 1 minute, the silver bullet, where you are looking for an FEG in your direction. So you're going to look for a bearish FEG and you're going to look towards entering there. But just make sure that you mark out your candle on the 1 hour. Okay. So that's another way that you can also trade it, guys. I actually forgot to tell you guys that as well. So let me just show you guys that so you guys understand that. So if you go to this trade that we've just taken now, this one. Okay, so what you can do is you can use the same silver bullet theory that we used. So you can bring up your, where is our smart money concepts, right? You can bring up your smart money concepts here. And then you can see right here, if I'm not mistaken, it's not actually showing it, which I think it's because we haven't really filled it. So I don't know why it's not showing it. So what you still have your major areas here, right? But now I just want to switch this off because it's not really showing it here. So what you can do is you can see right here on this big red candle here, right here, we have an FEG. You see right there. There is a bearish FEG. Yes, Lauren, some people like to use 4-hour candles. Yes, you can. No. That's no. So you can see here that we have a specific, yeah, you can quickly go get yourself some, my boy. So you can use an FEG if you want to potentially. You can see here that it it hasn't come back into the FEG. You can potentially say, okay, well, you know what, there is an FEG here, so that's a pretty good area. Having multiple confluences and stuff there. You can also use the FEG if you want to use it as an entry model for you. It's entirely up to you how you want to trade the CRT. You can use some of the smart money concepts. For me personally, I just want to look towards hard time frame, giving me some structure, because when I get to this area, I want to kind of like already have the bias in my mind to say, listen, if we get here on the 1 hour, this is a strong area of resistance, right? So the likelihood that I'm going to get a good trade in here is pretty good. And I mean, if you have a look at this trade, I don't know how far we are in this trade, but I mean, once we hit here, it's going to be a 1 2 2 2. So the moment it touches there, you can say, okay, cool, it looks like a pretty good decent trade here. So once we get there, I'm going to take half of it off the table, and then I'm going to target the opposing liquidity, or you can say, no, I'm just going to target the I can just target the bottom section there. Okay, so if you are using smart money concepts, you can use it. If you want to use a 4-hour candle, you can use it. Just take into consideration one thing, guys. When you are trading the 4-hour candle, make sure that you have the second 4-hour candle closed before taking the entry. Okay, so if you got the first 4-hour candle that printed, that went into the area, wait for the second 4-hour candle to close and then look for a CRT. Yeah, you can also look towards the fib. So if you're saying, listen, I want to look towards the fib, you can say, okay, that's pretty much the swing high to the swing low there. You can also, if you guys want to prefer to say, no, I would rather use my fib, then you can look towards the swing low there and say, okay, you know what? We're on the golden zone there, kind of like, so this would be a great area for me to get in and then look towards, my profit. It's entirely up to you how you want to do. Remember, the fib is just going to help you to manage the trade where, to profit targets, where we are lying. Look there. You can see that, price wants to push further down. We are rejecting off that area. So obviously when it's rejecting off this area, it's going to look towards grabbing some more liquidity towards the downside. You can see that price did fight to get through here. So that would be a great area to take some profit off. Okay. But either the fib, FEG, or just looking at the candle saying, you know what, I think this is a pretty strong area. I'm going to just take the trade here, put my stop loss there, but practice it. It's entirely up to you guys. But CRT is a pretty good trading strategy. I just think the important part for you is to put it together with either an area of support and resistance, higher time frame support and resistance. Otherwise, if you want to look towards something else as well, you can also look towards the stochastic, right? So you can see here, price has gone there. Now you can see the stochastic is at the bottom. So what you can potentially wait for the stochastic to come back to the top here, see if that area broke there. If it didn't, if it just pushed back to there, then look towards getting an entry on the stochastic there. For example, you guys can see here, look here. Here, we're on the opposite side here. I'm just using this is one of the CRTs, right? Look here, we're on the opposing side here. You can see the very next candle came back up this area. We're on the opposite side of the stochastic. So you can say, okay, cool. I think we've got the momentum behind us. It's 4 o'clock in the afternoon. We've got New York open now, full things. Yes. So you can also look towards the stochastic to say to you, listen, this is maybe a good time to get into the trade. Okay. So you can see that this one on the other end is not a good time to get into the trade. Well, it's not a bad time. Look here. You can see that the stochastic started pushing down now. So you can see the stochastic is scraping towards the bottom side, but this would have been a much better entry, this one, than that one. And why is this one better than that one? Is because this specific CRT followed in alignment with what the market was doing. The market was bullish for the day. Look there. So for the whole day, we were bullish up to there. Then we came back down to this area down here. And you can see then we pushed back. So you had the momentum here. You had London and New York momentum. Now, not so much momentum. We are slowing down for the evening. So this might not be the right CRT to take during this period. So rather look for a CRT during the high volume sessions, which is normally around here, which is normally between 9 o'clock to 5 o'clock in the afternoon, because that would be the ideal area, where volume is there. You can see volume is not really here. Is the London? No, not necessarily, guys. Not for a beginner. The important part, guys, is having multiple confluences, right? So what makes these trades so good? Why was this such a banger of a trade? So let's look at the confirmations. On the 1 hour time frame, we did confirm that we are in a strong area of support. That's number one, right? So we looked at this and we said, you know what, we're in a strong area of support. I think this is going to be a good candle. And this area of support is not just based on what I'm seeing here, it's based upon what price did before. Look, price bounced, price keeps bouncing in this area. So let's see if price is going to bounce again. So that would be confirmation number one. Confirmation number two, on the 1 hour, we saw the candle. So we set up our candle and we can clearly see now that the price swept below that and came back above that area. So we can see, okay, price swept it, came back into that area. Let me just have a look here. Okay. See, price came down right there at 5 o'clock. That's where the first candle swept outside of that area and came back in it. And look at the candle. The green candle is bigger than that candle, right? So now you're looking and saying, okay, cool. This candle is a lot bigger than this one. So I'm thinking that, that there is momentum behind it. And when I look down at the stochastic's also saying to me, hey, we were pretty oversold, so maybe it's a good time. And that's why this trade played out so well for you, because you were in the right, you were the starting of London session was coming in. You also had the confirmation, that that the momentum was behind it, and it was a pretty good trade. And you can see here, you could have taken it all the way to the opposite side here. And I mean, this is you just needed this trade for the whole freaking month. You could have just taken this trade for the whole month, guys. Okay. So, it all comes down to just looking towards a good setup, finding yourself a good setup where you have multiple confluences. Area of support, a good strong candle coming back into the range. Stochastic is on the opposite side, showing me that momentum is going to come in, right? And on the higher time frame, we are showing a lot more, strength towards the bullish side. We know that today, the whole day, it showed us, we came out of Friday, which was extremely bullish, and we're expecting some more bullish momentum. Oh no, Franco, you can use it on NASDAQ. You can use it on German 30. CRT is if there's a candle and you got a candle, you've got a sequence of candles, anything that uses a candlestick, you can use. Yes. Okay. So you can see that, that candle range theory pretty much works on any type of chart that you are looking for, guys. So you can look at any type of chart and you can find, as long as it's got candlesticks, you can look towards it. Just make sure that when you are trading candle range theory, you don't isolate it to only a specific candle. So look for a candle that is bouncing off a major area. If you wanted to wait for this candle to close here, for example, I think this candle would have closed at 6 p.m., which would have been here, right? You can see here, this is 6 p.m. on this candle here. Then you could have, if you wanted to be a bit more, reservant, you would have said, no, okay, I'm going to look towards this candle's close here. So instead of entering just here, I want to see that the next candle actually does close back into the range. You could have taken your trade here and look at it. It was still a nice 1, 2, 3, guys. 1, 2, 3, nice trade. You would have taken all the way to the top there. So it doesn't matter how you want to place the trade. The idea is just to find good areas of support and resistance. I think what makes the strategy, makes that improves CRT's results drastically is if you are looking to a good area of support and resistance. All righty. What else is there? I think there was a couple more things we had to cover. Wait. Before I don't cover it with you guys. Wait. Okay. Now let's have a look. Okay? So the opposite scenario, right, is what you want to do is you want to have the parent range. Then you want to look for a price that sweeps the low or the high, then closes back inside, and then ask yourself, what changed? Who failed to maintain control? And what does the wick tell us? Where is the opposite range extreme? And this forces you guys to look at the anatomy rather than memorizing the CRT. I want you to look towards multiple confluences. Don't just, yes, Lauren, you can look for that, right? You can look for, so the standard CRT model would be, you'd wait for the first 1 hour candle to create the structure, right? Then you're going to look for the next 1 hour candle to go outside and come back and close within the range. Okay, so that is the basic CRT model. If you're using nothing extra with it, you just want to trade the candles, you can trade it that way. Okay, so let me show you guys what that entails. So if you are just trading CRT by itself, no confluences, no nothing, you just want to trade CRT, this is how it would pretty much be set up. So what you're going to do is you're going to go to the 1 hour time frame, and then you're going to look towards, so now imagine there is none. Wait, let's go to a piece in the chart where this does not exist. So let's say, for instance, you are looking towards these candles here, right? So you can see price didn't sweep below that. Here you can see that price, right? Sorry, guys. We have a fib block. Okay, sorry, guys. We have fib quickly. Let me just quickly have a look. I just got a ping from my phone. 15 minutes. Let's just quickly have a look. Let me just switch off did I now close the wrong one? Yeah. There's the one with the reminders. What are we seeing? Yeah, guys, we have a fib short. Yeah, we have a fib short. Okay, so yes, it is giving us a fib short at the moment. Now I'm showing you guys the fib during the class. Okay, so guys, yes, it's giving us a short position. So what we're ideally going to look towards now is to look for an entry here. Okay, so I'm not going to take the trade, but we're going to simulate it. So that's going to go where our stop loss is going to be, and then our TP is going to be down here. Okay, so it's just given us a fib short. Let's quickly have a look at our confluences. Okay, guys, there you can see it, right? Can you guys see what it looks like now? So 4 out of 5 ain't that bad. Okay, so you guys can see we've got 4 out of 5. Okay, guys, everything is in alignment. So now let's see whether we're going to have a valid fib block. So look there, it's showing us we have a short position. Okay. So just pinged me and told me we have a fib short. Okay. Okay, so it's not finished printing yet. Okay, so I shouldn't have taken the trade, guys. Okay, hold on. It's pinging us for a fib short. It's not done yet. Okay, so it's not, I must maybe wait for a candle close, shouldn't I? Yeah, maybe wait for a candle close, Marnie. Hello. Okay, so how much time have we got? Okay, so we've got still 12 minutes on this, guys. Okay, so let's see. Okay, so it pinged me when it started doing it, but we just then have to check to see whether it is a valid setup. Okay, I want to enter on the candle, not even freaking closing. Okay. Hello. Okay. Okay, but at least you, yeah, Lindy, it's like, hello, Marnie, hello. You know? So let's wait and see, guys. Let's wait and see. All right, so okay, so you guys heard now the ping, eh? When I heard that ting, I was like, Shit, that's my thing. So you can see we've got a valid fib now setting up. Look, 4 out of 5. We can see our change of character. We've just got the swing low that we need to. So you can see we've had the higher high. We've had all of it. So now everything is, so we would look at an active trade, which would be the short. So I think on the close of this candle, I will put in my order there and see if it gets take. Neil, is yours also showing that? Oh, you need to set up your words inside, guys. So just go to your indicator, right? Just go to the indicator there and then just set it up here where it says show my latest marker block. So make sure all of these are switched on. Okay. All right. So now I'm somewhere recording us doing a fib block as mine. Okay. So all of you guys are seeing the same thing I'm seeing on the chart. Okay, cool. Okay. So now we can at least all look at it together. And okay. So whenever I get a ping, I will send you guys a screenshot. Okay. Because I have, and it's pretty cool because my indicator wasn't even on my chart, guys. My indicator is set up. You saw it was all switched off. So even with my indicator being off, it still pings me and it says to me, hey. Yeah, so wait for the close, guys. Okay, thanks. Okay, so Lauren said she did send you guys the settings. Okay. All right, so I'm going to send you guys an update of how that trade plays out because we already had the one earlier today, and now we're going to have the next one as well. Okay, so let's see how that pans out, guys. No, but now we need to finish clause. Okay, we need to now finish clause. Someone get excited about a fib block. All right. Okay, so a setup is not a, so CRT is not a magical signal, guys. Okay, a setup is not a guarantee. CRT gives you a framework for interpreting price behavior. It does not guarantee a reversal, a profitable trade, a specific target, or a specific win rate. Okay, so remember, the student should learn to test the framework using historical data and their trading rules, guys. Okay, so the idea around it is it's just an additional thing that if you enjoy trading, candlesticks, and it's something that you can add to your setup. Okay, so your first challenge, guys, on the CRT is I want you guys to go this week, open up. Yeah, Yoshna, you're going to have to, you're going to have to pay. It's only about $200, guys. About $200. And then what's nice is you can, okay, I'll show you guys now. Let me just first finish the course and then I'm going to, so for this week, guys, open trading view, find 5 potential CRTs. Now, please go and find the chart that you would like to trade it. I know that Ava, she's trading the DAX, right? So go look on the DAX. Whoever wants to do a NASDAQ, go to US 100. Those that wants to do US 30, go to US 30. Those that want to do gold, go and do gold. But I want you to go and look for 5 potential bullish CRTs. Okay, and 5 potential bearish CRTs. Okay, mark out the parent candle, the 1 hour candle. Look for the candle to sweep and come back in, right? Mark the CRH and the CRL, right? Then identify the sweep, identify the close, screenshot the setup, and record what happened next. Okay, so have a look at it. Go look for some setups, guys. Okay, go look for it tomorrow. Set up your chart and go look for one. Doesn't matter if it's win or losing. The idea is to find some setups. So go set up those areas of support and resistance. Look when a CRT candle comes in. And then all you want to do on the 5 minutes, you want to see, does it sweep? Because remember, what I showed you guys on the 5 minute is it swept outside of the range. The same way, guys, we do the silver bullet. The silver bullet sweeps out, comes back in, and then we enter on a fair value gap. You're doing the exact same thing, guys, with CRT. You want price to sweep out, come back in it, but the difference now is you're not waiting for either side to break. You are now already saying, here is an area of support, here is an area of resistance. I'm going to see what does price do on that candle. It's either inside that area or whatever candle is there. I want to see what does it do on that specific candle. Okay, and then mark out your CRT and say, there we have it. There it swept out of it, came back in. This is where I'm going to put my position. Okay, guys. So that is the idea. Right. So the question that matters is don't ask, did I find a CRT? Ask yourself, what did price do after the range was taken and rejected. Okay, so look at pattern hunting, change from pattern hunting to market observation. Did the price come back out? When it re-entered that area, was it a small pickaninny candle or was it a big, nice, fat, juicy reversal candle, right? So look for those setups. I'm going to see a nice, fat reversal candle coming back into it, showing us momentum coming back into the setup, guys. Okay. So our final thoughts, guys, is candlesticks give you information. Candle range theory gives you a framework to interpret it. Okay. But your job as a trader is still to observe, understand, test, manage risk, and execute. Okay, guys. That is my final thought. Now we are done. We've had so many things that happened in class tonight. Okay, let me finish stopping the recording.